Okay, I think we've got a good number in now, so we'll get going. Well, good morning, everyone. I'm Isaac Richardson. I'm going to be the host today. I work as a contact center insurance specialist here at IPI, and today we're going to be discussing what AI and digital-driven automation really means to the insurance industry. We're going to have a Q&A at the end, so if you've got any questions as we go, you'll see there's a questions bar on the GoToWebinar panel, so please feel free to get those coming in. So let me introduce you to our panel today. We're very fortunate to have with us Rick Huckstep, who is chairman of the Digital Insurer, a keynote speaker and advisor on all things digital innovation in the insurance sector. And Rick's going to talk us through what he's seeing in terms of trends in the industry, particularly now, obviously, in the era of COVID-19 and what that means. We're also very fortunate to have with us Mark Bower-Dyke. Mark is an entrepreneur to start with, and the founder and chief visionary officer at Bewiser Insurance, with over 40 years of industry experience. He's going to give us more of an insurance leader's, a customer's perspective on what he's seeing in terms of trends with AI. And then following him, we're going to have Steve Murray. So Steve is our applications director here at IPI, and he's really been a pioneer and at the forefront of bringing AI-driven self-service capabilities to some of our customers. So he's going to give you a bit of an overview of some of IPI's capabilities in this space, and also give a demonstration, which will be really interesting. Finally, we've got Ben Smith, who is one of our solutions consultants here at IPI. And he's going to take us, I suppose, more from the theoretical into the real world and look at some real business cases, some real ROIs of customers who have deployed this type of technology to sort of see how it can really be justified. So as I say, at the end, we're going to have a panel discussion with some Q&A. So please do get any questions you've got coming in for that. But without any further ado, I'll pass across to Rick. So over to you, Rick.
Thank you, Isaac. I hope you can all hear me well. I hope everyone's keeping safe and well in these unprecedented and challenging times. And as we look at the impact of digital technology on the customer experience in the insurance industry, I guess we have to do so now in the context of the pandemic. And there's no doubt really that COVID-19 is acting as an accelerant to the digital economy. And particularly, we're seeing this shift from the physical to the virtual world. And some of the numbers are quite incredible at the moment, because you're seeing things like in the first, 6 months of this year, online spending with US retailers is up 30% from the same period last year. I think according to PwC, more than 80% of UK consumers are now buying groceries online and are planning to continue to do that afterwards. And across Europe, the whole of Europe, offline transactions, according to Oliver Wyman, are down 60% year on year. So there's no doubt that the impact of COVID is going to have an impact on anything we talk about and look at when it comes to the customer interaction, the customer engagement, and the digital innovation that's applying to the insurance industry. Thank you for the slide there, Steve. No, go back one, sorry. That's it, okay. Now, where I normally start here is that when you tend to ask people to do a word association between the word insurance and technology, the most common answer is the word legacy, which of course is a bit of an irony in there, because the insurance industry has always been an early adopter of technology, from the days of tabulation machines at the end of the 19th century right the way through to the introduction of programmable computers in the 50s. And insurers have always relied on technology to process the data that underpins the industry. And yet when the iPhone came out in 2007, which really signaled the start of the mobile era after the internet age, then the insurance industry was just missing in action at that time. And it's still hard to conceive that 13 years have gone, in the 13 years since then, before then there was no Uber, Airbnb, Instagram, Spotify, WhatsApp, or even an Android operating system. But you still don't really see what the equivalent in insurance is yet. Now, I would say that things started to change about 4 or 5 years ago with the emergence of this thing called InsurTech. And this is where you now had new entrants into the insurance space coming from a technology and a digital perspective, not necessarily from an insurance perspective. And they've had an impact. And so for the next few slides, I'm going to talk about some of the examples I've seen in this space, because this has really been the area that I've primarily worked in since about 2015. If I could have the next slide, please, Steve. Now, when we look at, when we look at insurtech, digital insurance, innovation in the industry, however, we kind of cut and dice this, there are many flavors of technologies that are being used to drive the digital insurance agenda, but there's no doubt that top of the list is artificial intelligence. A recent survey by KPMG reported 95% of insurance execs saw AI as having a radical impact on the industry. And when you look broadly across all segments of the economy, the numbers speak for themselves. You see them on the slide there. But for me, in many ways, this is just kind of like technology-smology, because it's not really about the technology. It's how the technology is being used. A consumer survey from Accenture reported that 74% of consumers said they would be happy to take insurance advice from a virtual assistant. So there's no question that there is an acceptance out there in the marketplace. But it is this, so it is this shift in the customer experience which is going to have the most profound effect. And there's no question that artificial intelligence is going to be one of the key enablers for that. I'll just tell you a little story as an aside on AI, which came to me the other day. About 5 years ago, I was at a London Markets event, and I happened to say that within a decade, 95% of all underwriting would be totally automated. And after the event, a London market broker came up to me, he opened his jacket and he got out his pen and he said, "Rick, nothing writes business faster than a Montblanc pen," which was kind of a sort of a way of looking at the unique specialization that's sat within individuals. And here we are in 2020, and Brit Insurance have announced their partnership with Google Cloud, and we're waiting for the release of the world's first algorithmically driven syndicate for the Lloyd's market called Key. And so here we are, within 5 years, we've got it in that world which thought it was isolated from technology for so long. Next slide, please, Steve. So the way I would always position this is that I really want to come at this from the perspective of what does this mean for the customer, as opposed to what does this mean from a technology point of view. So I will talk about technologies, but I'm not going to get into the individual technologies. This is around the applications. And when I look at the current trends around digital insurance, it really does fall into these 5 key areas, which I shall now go into. But you've got convenience, which is making it easier to buy insurance; engagement, which is creating lifestyle apps, lifestyle products that become sticky; self-service is the whole move towards in the claim space, about getting customers much more engaged and involved in the claims experience; the whole world of automation, which is around data and how you can better use data to enhance the whole customer experience. And then finally, we'll end in what I call the 100% digital trend. Now, of course, they're not actually 100% digital because there are humans in there, but it's sort of 99.9% digital, but it just looks better this way. Next slide, please, Steve. Right, okay, so that's kind of all the preamble to kind of get us to the meat and essence really now of the presentation. And I would say that it starts with this whole notion of convenience, and the best way to look at it is at the distribution end of the insurance value chain, and how you make it easier to buy insurance. And I don't really mean it from a price comparison site point of view, because that's just a race to the bottom on price, and let's be honest, it hasn't necessarily done the insurance industry many favors. What I really mean and focus on here is around using kind of digital and mobile engagement that enables a personalized buying experience. And to give you some examples, a US survey by Safe Butler compared the online buying experience of 10 firms. There were 8 of what we would call the incumbent insurers, and there were 2 insurtechs. The 2 insurtechs, which were Jetty and Lemonade, they came out number 1 and number 2 in that survey in a comparison against all 10 of them. And the difference was that Jetty and Lemonade provided a quote in less than a minute compared to around 3 minutes for the incumbents. Jetty asked a lot less questions, and Lemonade gave the lowest price. And this is what the incumbents are then facing when they're looking at how to compete in the marketplace against the digital newcomer, because this is making it easier and simpler and quicker. Closer to home, to give some UK-based examples, a favourite of mine is a mobile app called Cover. Now, Cover started about 5 years ago. It's a mobile-only app, and they provide short-term and subscription-based car insurance cover. Now, the thing that's so great about Cover from a customer perspective is that the design principle behind Cover is very simple. It is to make it easy and quick for the customer to buy their insurance. And the way they do this is by minimizing the data input from the customizer, and they maximize the amount of data they can collect in the background. And a key move for the team when it comes to the speed in the app was when they first built Cover, was they decided they were not going to use the traditional insurance infrastructure. So they built the pricing and rating tables into the app. And when I asked Freddie McNamara, the founder, of what was the benefit, he said, well, that 200 millisecond delay, would have killed the app, because in a digital experience that is a lifetime, and it's kind of hard to get your head around 200 milliseconds. But now when you look at Cover, they've raised about 15 million pounds. They've got 250,000 customers. They've sold over 1 million hours of short-term cover, and book premiums over 150 million pounds. And they've been very, very successful at building what is essentially a very easy and convenient customer experience. And one of the keys when you look at them from a cultural point of view is that as a team, every member, and there are about 65 people in the team in Cover, every one of them spends at least 4 hours a month talking to customers, from the chief exec down to the to the intern. Every single one of them spends time every month talking to customers and constantly refining the customer experience through the app. Now, in the same space, another example, but one that provides a lot more functionality, is a Silicon Valley startup called Trove, who were the first to market globally with an on-demand micro-duration insurance product. And this is where you can insure items to a second, and they will bill you down to individual seconds. Now, the concept behind Trove is a treasure trove. The idea is that the customer builds a personal asset inventory into their mobile wallet. And whereas Cover is a distribution play, Trove is a kind of a full soup to nuts digital insurance policy platform that runs both from quote and buy and policy all the way through to claims. But the key is that it does enable the personalization of Cover with real-time asset valuations and the ability to turn Cover on and off on demand. The quote and buy experience for Trove is not just mobile. There's a big use of the internet as well. And what Trove found after they first launched down in Australia with Suncorp was that customers like to look at the product online. They like to do their initial investigations with a search through the internet. And then when they were comfortable with the product, they would then happily move to the mobile device and run their insurance from the mobile. But they use both mediums as opposed to mobile only. And if you Google Halifax Renters Insurance in the UK, you'll see on their page there's a neat little video on the site of the Trove chatbot going through a new customer sign up. So you'll kind of see how, what that customer experience is like. Steve, if I could have the next slide, please. Engagement. Okay, it's one of my favorite subjects, this one. Because the thing here is that when a customer, and you can apply this to any line of business, but when a customer gets no value from a product, then they are inevitably going to shop around. And of course, the problem for insurance organizations is that they generally have 2 touch points a year. One is at the point of sale, and one is at the point of renewal. And you know, often that point of renewal is not necessarily a pleasant experience if there's then a price hike that goes with it. So the insurer does not have, in a natural product cycle, many opportunities to add any value or create any kind of engagement. And so you've got the emergence now of this whole lifestyle, sticky engagement type relationship, where the insurer is providing much more than just the safety net of an insurance product. And the pioneers of this actually are a company called Vitality out of South Africa, who started 25 years ago. And you know, so they're not in this new world space, and yet they're by far, in my view, the best ones to watch. When John Hancock added the Vitality product to every single one of its life products as a standard, it wasn't, they took it off as being an optional extra and made it a standard. John Hancock saw their engagements go from 1 or 2 a year to 1 or 2 a day. And what that means is then that John Hancock can use that data and that insights to create a continuous relationship with the customer, which makes it very difficult for that customer to move away from at the end of the year. And of course, what drives all of these things is this technology category, which we call wearables. So Vitality originally started out with a pedometer that you used to plug into, you know, your computer to download the data, but now, you know, everyone has a Fitbit or an Apple Watch, or you have data from your mobile phones, and these sensors are rich in tracking everything from, you know, how far you've moved, your activity levels, your heart rate, stress, and sleeping patterns. And all of this information is very useful, feeding into the you know, the understanding of the individual customer. Now, the market for wearables is huge and is forecast to top about $100 billion in the next 5 years. So these things are going to become universally available in the marketplace. But the idea is real simple, and the way that it's currently used at the moment is so my cat's decided to join me. The way that it's used at the moment is primarily in a driving incentive and behavior mode, as opposed to an underwriting mode. I think this is going to come. There's no doubt that in time, as there a longer tail of data, that it will start to influence underwriting. But essentially now, what the engagement model is around driving and trying to change and influence customer behavior in ways which are going to increase the state of their health. Because we know from, if we look at the United States, 1/4 of all healthcare costs are attributable to risks that can be reduced by modifying behavior. So by simply saying, by gamifying it and saying, if you do 10,000 steps, or you go to the gym today, or you get your heart rate up for 20 minutes, we'll give you a Starbucks coffee, then they are enough to incentivize users to stick with that app. And if it becomes one of the main apps you use on your phone, then that is where you create the stickiness. Now, if you look at it from a motor, because that's very much on the life and health side, if you look at it motor, a great example in the States is a company called Metromile. They are they're the leading pay-per-mile auto insurer. And what happens with Metromile is that customers are given a dongle that is a little device about that big, and it plugs into the onboard diagnostics port. It then syncs with the mobile app, and the machine learning AI that sits on the cloud platform that feeds into the app then takes the insights from the car, from the mobile phone, and develops a driving style and understands the driving behavior, which can then feed rewards if you drive better. So they would feed back, and they'll tell you, that you drive a bit too fast, or you drive in the wrong areas at the wrong speeds, and so on. But the thing that the app gives back to the customer is, which makes it used on a daily basis, is that it's constantly reporting back on the health of the car. So it gives a real-time health check in your mobile phone. It does a whole load of things around taking customers to parking sites or helping you find your car. And it's proven to be very valuable when it comes to stolen cars, and they have a 92% found rate on stolen cars that have been fitted with these dongles. And so whether you look at it from mobile, from the motor auto side, or from the health side, all of these are around creating a lifestyle app that becomes part of people's daily lives. And then at the end of the term, it's much harder for the customer to renew with a different, or to change to a different policy, different provider. Steve, if I could have the next slide, please. Self-service. Okay, so it says that it's really driven, customer-driven claims. You know, this is the moment of truth for all customers and insurers, and in many ways, I think any other industry would look at this as they want more claims, because they have more opportunity then to delight the client. As I said before, you know, there's very few touch points. And I always love the Jeff Bezos quote, which is that if you have an unhappy customer in the physical world, they will tell 6 people, but if you have an unhappy customer in the digital world, they will tell 6,000. Of course, the flip side of that is true. So the whole goal with this is to delight the client, which means settling the claim quicker and with minimal effort on behalf of the policyholder. And this is where we see in these, you know, this rise in these self-service claims platforms. These enable the customer to initiate a claim digitally, submit relevant information, be in control of the claims process from first notification of loss. And in the background, they're being assessed by the counter fraud systems, and in many cases, the decision on whether to settle is being automated and can be processed in automatically against certain rules without necessarily involving any kind of human interaction whatsoever. A great example from the UK perspective, because this suits the high volume, low value kind of claim space, is a platform called Writingdem. Excuse me, Writingdem, actually, I just this week saw that they won the best customer service product for business at the 2020 Customer Service Excellence Awards. And you know, that doesn't really surprise me. I know Writingdem very well, but they are a digital FNOL platform, and automation is the key to driving that customer experience and driving cost efficiency for the insurer. And what they've found with their customers is that claims are being settled approximately 3 times faster. So on average, a 21-day cycle is coming down to 7. One of their insurance customers estimates they're saving around £125 per claim based on, you know, various forecasts and predictions looking at historical trends before they use Writingdem. And interestingly, they found that 30% of user activity is after 8 p.m. in the evening. And so, you know, customers are clearly using this at a time that's convenient for them. Now, if you want to take this a stage further, then a great platform to look at is 360 GlobalNet, who in the UK are deployed by Direct Line Group and Allianz in the UK, and they have implementations around the world. Now, with the 360 GlobalNet platform, they can go a step further. So when the call comes into the contact center, they can initiate a live stream with the customer straight onto their mobile phone. They can give a real-time inspection. They capture obviously all that video. They can bring in an expert if necessary, because they need some immediate assistance whilst on the call. And all the time in the background, they have machine learning and artificial intelligence that is assessing the unstructured data that's coming through and everything that's been submitted into the claims process. And they're looking again for you know, they're doing the counter fraud checks, but they're also firing off things like they can be initiating cost estimates. So for example, you know, if you're going through the claims process and you say, you know, I've smashed my Samsung television and it's a, you know, D47B or whatever the model is, in the background they're going out and getting real-time quotes. So they say, okay, that's currently worth £1,500, and then they can make that settlement in real time by doing that kind of work in the background. And one of the things I like about 360 GlobalNet is that it's not just a technology only solution. What they also have is a service which they call With You in 5, where they crowdsource local experts to go and visit the customer at a time to suit the customer. So instead of the typical experience, which is you make a claim and then you get a call that says you know, a loss adjuster is going to come out and they tell you when they are going to come, and you have to sit at home and wait all day, and it might be a week. They can crowdsource, and someone might say, well, look, I'm in the area, I can go around at 8 o'clock tonight, and it's a gig economy type model, and it means that they're able to respond so much quicker to customers as a result, and they take advantage of a much wider, more flexible workforce. And then when you look at it from the motor side, you're going to see much greater use of actually the insurers being ahead of the customer when it comes to road traffic accidents. So with ADR technology, you're now having collision sensors in the vehicle that will then know when there has been an impact, and will have some sense as to whether it's a small, medium or large impact, and can immediately send a message out to the contact center that says that, you know, this customer in this vehicle has been in a road traffic accident. It looks okay, or it looks like it's major, but whatever, you can do something. So you imagine the situation that the driver who's still kind of just working out what's happened actually then receives a call from the insurer proactively to say that we see you've been in an accident. Are you okay? Do you need assistance? Do we need to send any kind of help, a tow car or an ambulance? Do you still need to get your kids to school? Do we need to send you a taxi? And then, of course, you add on to that dash cam technology, which has been introduced a lot in the road haulage space, because you then link the dash cam to the motion detector, and then you can immediately upload 20 seconds of footage immediately prior to the collision. So you've got real evidence of what happened prior to the crash, and that sometimes is useful when it comes to any kind of disputed liability. Now, in the US, there's a platform called MDGo, which takes it even further. And what you get with their ADR device are 7 or 8 sensors, which are then fitted around the vehicle. And so when there is it detects an impact, it will also know whereabouts it is on the car, whether it's front or back side. And the sensors will give some indication as to the extent. And then what they can do is they can then make some assumptions around whether this is likely to have caused physical, personal injury, or it's just a small bump. But again, this is all around automating the claims process, and the more that insurers can pre-populate the claim before the claim is made, or put that, or have the claim settled more quickly, then the better chances they are of delighting the client. So, Steve, if I could have the next one, please, which is around automation. Now, I've covered kind of AI and machine learning, and how some of this technology is being used, but actually, what the biggest area is, another way of looking at automation is really in terms of the automation from a data point of view, because this is the sort of rocket fuel for all of this, all of the automation innovation that's coming through in insurance. And a great example of how you can pull together data to enhance the customer experience is from Allstate, where they have what they call the Good Home offering in the US. And this was produced, another Google Cloud collaboration. And what Google Good Home does is it uses external data and artificial intelligence to provide home insurance quotes. The customer enters their zip code, Google Maps brings up the house, they show it on Street View. And then what they do is they pull in facts and characteristics specific to the house, to that property, and they pull them into the whole display, and then they customize the quote using that data. And they've found that their conversion rate has increased by 350% by going through that whole experience, because it's a much more colorful and realistic and personalized quote and experience for the customer. I wanted on this slide as well just to touch on this area which is known as natural language processing. I mean, this is again a growing market, forecast to be something like $80 billion in the next 5 years. And when Allstate deployed cognitive AI to they have about 3 million customer calls a year, they cut the duration of their calls and they boosted the success rate of their customer inquiries to around 75%. But it's a tech. Now that was kind of in many ways a kind of a general, that's a customer discussion. But it can also be used for very specific purposes, not just the sort of general customer inquiry. And in the UK, if you look at a company called Recordsure, they have a natural language processing solution specifically for financial services. The algorithms are tailored and tuned to listening to regulated calls between agents and customers. The natural language processing is listening for what has been said, as well as it's listening for what has not been said. And instead of the compliance team just listening to a sample of calls, the AI platform can now listen to 100% of the calls. And it can do that 24 hours a day and with 100% consistency, because it doesn't get tired, it doesn't get distracted, it doesn't need to have a coffee break. Its mind doesn't wander onto other matters. And there is human involvement in this service from RecordSure, because it's not capable of doing everything. But you imagine that if you could listen to 100% of calls and you just deal with the anomalies, you just say to the compliance team, listen at 7 minutes 42 for about 2 minutes and see what you think, because we think the agent said something they shouldn't have said, or they didn't say something that they should have said. Okay, next slide, please, Steve. Now, what you get if you sort of kind of like take all of the above and put it into a, a vertically integrated stack, where you get this this notion of 100% digital. Insurer, there are people in there, but you get my point, that in the same way that Uber is a technical platform that provides mobility, and Airbnb is a technical platform that provides accommodation, then there is going to be a move towards a player that is a technology platform that happens to provide insurance. And when you look at the big names that are in the other industries, really what makes them different is the customer is king, quite literally, in a kind of an Amazon, Jeff Bezos kind of way, which you don't associate with the traditional insurance market. And B, they are, digital powers everything. They are tech companies first. If you're really interested in this place, the real place to look for this is in China. They have a different business environment there, which has enabled the emergence of these. And the first one that came out in 2013 was a company called Zongang. And they were the first insurance company in China to sell their products solely over the internet. And within 4 years, when they IPO'd in 2017, they raised $1.5 billion in just such a short time. And they've now, the numbers are phenomenal. It's like they've sold over 10 billion policies and have over 400 million customers. And the thing about Zongang, as opposed to some of the others out of China, is that everything from quote and buy, highly personalized premiums, and the settling claims is very, very highly automated, with as much as, in many cases, 99% of the pricing and underwriting and the settlement of claims being entirely automated. Now, they are doing lots of small insurance policies. So this is, you put these things into context, but it's just a matter of time before these things scale up. Closer to home, in the West, all eyes are really on Lemonade, as far as I'm concerned. They launched in 2016. They IPO'd this year at a staggering 28.5 times valuation of GW gross written premium, and that sort of just indicated that the market saw them as a tech player more than an insurance player. Now, I've had the good fortune to know Daniel Schreiber from before the launch, and I can tell you, certainly in my honest opinion, they are the real deal, and I genuinely believe that they will be the tech player for insurance. And there are always 5 things, I would say, that people should really understand about Lemonade as to why they might be different from anybody else. First, they are genuinely obsessive about delighting their customer, from whether that's making their chatbots playful, when they're communicating with customers in plain speak. And you see that evidenced by the very high customer satisfaction ratings that they get across all of the segments they operate in, and also by the very high customer retention rates that they're seeing already in such a short period of time. And they're largely growing organically, and this is being fueled by word of mouth, recommendations, and ratings. The second thing is they have a different business model. When they set out, they wanted to address this whole idea of trust and the perception of a conflict of interest between the insurer and the customer fighting over $1 of claim. because $1 I don't pay you in claim is $1 that goes to my profit line. But what they did was they split the business. So for every $1 of premium, 25 cents goes into an operating company that runs the business, and the other 75 cents goes into a claims pool, which is used to pay claims, is used to buy the reinsurance, which significantly underpins the business, and any surplus is given to good causes. They call this the give back program, and about $1.25 million has been given back this year, which is to customers' charities. And again, the notion is that if you say to a customer, if you're going to embellish a claim and you've nominated your local cancer charity or your local kids home as your charity, if you embellish the claim, you're taking $1 which is not going to go to them. Now, that is all part of building the overall brand value and brand proposition for their customers, which is about creating a trusted relationship. The third thing, which I think just follows on naturally from this, is they do have quite phenomenal customer retention and growth model that is all geared around getting a customer, often very first time insurance customers, and then keeping those customers with them as they progress. So typically they start with renter's insurance. So you might be a student or a young person working and you're in the city and you're paying about $150 a year, and then you stay with Lemonade, and within 2 or 3 years you've graduated, you've moved out to the suburbs, you've got yourself a partner, and you're paying $900 a year because you've now got a home. You can now add your pet, and then from next year you'll be able to add term life insurance. And what the Lemonade pitch, and this is what I think is exciting in the marketplace, is that their customer acquisition costs are zero once they've got their initial customer, and then they delight them and then they keep them. And again, this has parallels with the Jeff Bezos philosophy in terms of growing, the way you grow at Amazon. Fourth, they've simplified the insurance policy. I mean, they have taken out all the oldie English terms. They've taken out references to cassette tapes and out of date clauses. And what they've also done is they've made it open source. So if you go to GitHub, you can see policy 2.0, and customers and consumers can contribute to their policy. Of course, it's regulated. Lemonade have the final say. But the point is that they want to say, we are not going to get you with small print. Okay, it's going to be very, very simple, and everybody knows what they're getting covered for. And again, this is all about building trust. And finally, and this should not be underestimated at all, they have built a fully integrated digital platform from scratch. Everything from the front end to the back end and all the bits in the middle is one fully integrated, complete system. They do not have silos, they don't have data handling, there's no handoffs between various elements. When they make a change at one end, it ripples all the way through and reflects in every part of the system. And this has enabled them to be very flexible when it comes to both scaling and implementing new products. And I think that in times to come, people are going to look back and seeing that was one of the key defenses, one of the moats, if you want to call it that, which has enabled them to be particularly strong when it comes to being maybe considered as the disruptor, if there was going to be such a thing. And so what do all of these 100% digital companies have in common? Well, they're all tech platforms, they're all totally focused on the customer experience, and they all use tech for the sole purpose of making the experience easier and simpler and more convenient for the customer. And the philosophy is you treat the customer right and everything else follows from there. So, finally, in the interest of time, okay, well, that's me done. I've kind of like rattled through that fairly quickly. Thank you for listening and your attention. If there's anything you want to follow up on, you can get hold of me on LinkedIn, or we've got Q&A coming up. And I'll do a final plug for the Digital Insurer. This is a great source of knowledge, wisdom, thought leadership. We do newsletters, webinars, a curated knowledge base. It's www.the-digital-insurer.com. Sign up and you'll see me there, and you can get loads of free stuff. Thank you.
Brilliant. Thank you very much, Rick, for that. Really useful, really insightful, I think, to understand the technology marketplace, and certainly those trends that you've brought up there, those 5 trends, certainly tally with when I speak to customers in the insurance space. I think it's going to be really interesting now. We're going to have Mark Bower-Dyke, as I said earlier, Chief Visionary Officer at Bewiser. And Mark's going to provide, I suppose, a different perspective, a customer's perspective. I know he's got some strong views on Lemonade as well. But Mark, just to start off then, what's your current thinking and strategy around the use of AI, particularly in relation to customer experience and the customer journey?
Well, I mean, I think Rick was awesome there. That was very educational and absolutely superb what Rick put across there. I mean, obviously insurance has been going some 200, 300 years. Actually, it's maybe 400 years it's been going. And, the model of it has changed a little bit, and then a lot, then a little bit. But in essence, it's exactly the same as it was right at the very beginning. And I think Rick sort of talked about it a little bit there, is that you have a pool of money that you collect, you pay out the people with claims, and you keep 25% of it, because that's what you put, for the cost of putting it into that pool. And then that's how it all works. So that's the basis of how insurance works. It's all about everyone, the many contributing to the few who have unfortunately have a loss or have something that they need to replace. So the world's not changed, technology hasn't changed, technology's changed hugely, but the world hasn't changed. The process is the process, and that is always the way it's going to go forward. In respect of data is king of everything. We know everything about everyone now. If you went to Amazon, I think I remember talking to someone who pulled their Google. They pulled their Google history from thing, and it was a stack of paper like about 4 foot high on everything that Google knew about you because of all your searches, etc. So the world is full of data, and it is full of how we use that data to do exactly what Rick was talking about. It's all about making it convenient for the customer, all about getting their engagement into it, and it's all about making it a process that actually works for them, the customer. And that does mean in some respects in the insurance industry, all we're selling is a promise. We haven't got anything physical to give anyone. The only time that anything physical happens is when we sort out whatever we promised is what we're going to sort out. So if you've had a car accident, it's when we fixed your car. If we're insuring you against breaking down, it's when you break down. That's the only physical time you actually see anything for what you've purchased. So in lots of respects, it's trying to make that, to give that reassurance to the customer, and to give that reassurance about the promise that's gonna work. And that comes from having brands. That becomes from Lemonade is spectacular because it's got a very strong brand image, because that's what they've worked very hard on getting across. So again, those are really important aspects. So how do you get a strong brand? How do you make it work? Well, you need to be able to interact with your customer in a way that the customer wants to react. So very much about what's the future going to be is, I do believe that in some respects, AI just makes it easier for OI to work, and OI being organic intelligence to work. So if you've got good AI around you, that makes your decision making as an organic being so much easier. So in some respects, the way the going forward bit is that if you at the moment in your workplace or whatever you're doing are having to use 10 different places to go and get something, I have to go over there, look at, well, that's just ridiculous. And you want a one-stop place that you're actually as the worker interacting with every one of your customers on whatever way that customer wants to come in and talk to you. If a customer's talking to you, you want to know everything that's ever been said to that customer. You want to know every bit of data that's going on about that customer. You need that available to you as to be able to service them properly. Now AI can shorten lots of those movements, can even make some of those decisions and act on your behalf and things, But at the end of the day, you know, it's a promise, and you know, and there's so many unbelievable intangibles in anything that you need a human intervention to actually make that the right call on what way you're going to go. Otherwise, AI will just, you know, if you've got an automated learning process, it will just then it can go off in different directions, and that may not be where you want to go. You know, if you like, if you take it back, I think technology hasn't, you know, all technology does is improve the human experience. So, you know, many years ago, we all had horses, and we had to clean them, wash them, feed them, and look after them. We then discovered that, oh, what happens, you know, they can pull us along in a cart. So we got a cart, we got lots of, you know, people sitting in it. That's great. Oh, well, the horse is a bit of a pain in the arse. So someone invents an engine to make it work. Well, that's great. But at the end of the day, you've still got the human using it, and you've got the human taking it and developing from it. So technology is all about making the human more efficient and making the human more readily able to interact with other humans, because at the end of the day, we are all human. You know, people who buy something do so because they want to buy it, or they don't want to buy it, but they want, you know, they don't want to be, you know, at the end of the day, I mean, the days of you sitting there filling in 15 forms to get something is, no one wants to live in that world, and we've moved on. You know, the great thing about COVID's been that when you look at what's happened to, you know, I mean, my mum, she's awesome. She does everything she's 90 years old and does everything on iPad. She lives on it. Everything brought, everything done, you know. You know, in fact, you want to talk to her, you have to send her a text, you have to send her a message, you know, message to talk to her. She ain't going to pick up the phone. God, no, I can do this on it. So we have changed, you know, the way people interact with people has changed. But does she want to talk to me, or is she happy talking just to, of course she wants to still talk to me. Of course she still wants to interact. And when, you know, if something goes wrong with her shopping from Sainsbury's, she wants to be able to talk to someone and sort it out. Well, what have you done? You know, things don't really change. It's just what we've got is technology in the process to actually achieve that and make that work properly. And, you know, and I love things like Marmalade. And I love things where we, you know, tech companies invent things and set things, because that's the only way forward for us as a world, is if technology is always being progressed and always being put forward. However, it's then the reality of it, and the reality of making real money, not just pretend that you borrow it from people, that making real money, i.e. a profit, comes from the way you use technology and you integrate it into what business you really, that you actually core business that you have. So, I mean, I totally agree. Vitality is an awesome use of technology to fundamentally strengthen their core business. Absolutely spectacular. You know, but you know, lots of the other technology developments do get funded, do get things, but sometimes they're not going to work. But someone's going to nick the idea, because the ideas are generally very, very good, and you know, and they can be quality platforms. So I think the future is how we get this all together and how we make that all happen. You know, if you want any, I totally 1,000,000% agree. Why do we ask clients questions when we already have the data and know the answer? It's pointless. Absolutely. You know, you know, one of, you know, some of the bits we're developing and where we are on it. I mean, you know, and we're sitting there that if we're talking to a customer about a change, you know, we might be on whatever platform, we're talking to a customer about a change of car, a change of address on his car insurance, instantly pops up what the new house will cost to insure. We haven't asked him one question. We can tell him a definite price, and he can have that there and then if he wants it. If he don't want it, don't want it. You know, in respect of, I mean, I've seen so many, you know, apps for phones and stuff like that, you know, and, you know, they're all really pretty, but they're not. They don't interact. You know, you've got to grab the customer. You've got to make that. if I put an app on a customer's phone, then that should be able, should it mean that he can contact me through that app, he can talk to me, he can be on FaceTime, he can do whatever, you know, on video, he can chat, etc. He can download whatever he needs as information. It needs to be much more interactive, and it needs then to be something that's relevant to them. So I mean, one of the ones Rick was talking about, where you've got, and it is a classic, you know, you've got something like on measured miles or whatever you want to, this stuff where you've got a mileage thing, or you've got a telematics thing, which is monitoring how you drive. Well, you know where the car is, you know what it is, exactly you thing. But why doesn't, you know, if you've got an app there and you want, let's say I'm going on, I want to go to some, I'm going up to see someone else. Why, you know, it should be you should be able to do your routing on it. You should be able to do, you know, where's the cheapest petrol within 5 miles of me? Well, yeah, all those things should be built within that app to make it an actual part of something that you're going to look at on a daily basis, rather than you look at it once and think, well, that's boring, and never go back to it again. So, you know, that's, you know, those are the challenges that we have as an industry, and those are the challenges we have. You know, it doesn't matter what your business is, that's the challenges we have. So how do we make, you know, anyone where we're running a call center or something that you have to interact with customers, because at the end of the day, every customer's different. So there's you can't come up with every solution. So if you have to interact with them, then you have to make that simple, and you have to make it so convenient to them that it's easier to talk to you than it is to anything else. I mean, you know, the days of sitting on I mean, they're not gone, because you can sit there now. You can be sitting on the phone for 10 minutes waiting to get through to, I don't know, Eon or some energy company or whoever you're trying. It's just Mickey Mouse. It's ridiculous. Why, you know, why would you ever think that a customer would want to be in that, you know, have that as a way to be dealing with them? So yeah, I mean, Rick painted a fantastic picture of what the world's going to be like, and I sort of see that completely and utterly. Though, you know, who's going to drive it? Well, you know, some of the when you look at insurance, you know, it hasn't been around 400 years for no reason. It's been around 400 years because it knows what it's doing. However, you know, and in some respects, some of the things they do are quite clever, because they will sponsor and they will pay for some tech companies to do things and then pull the plug, but they nick the technology, which is fine. Yeah, I think that's a way of getting it into the bill. But we do need to have innovation going the whole time, and innovation is all what is about, you know, where our future is, not just as human beings, but as a thing is, you know, it is about making everything easy for the customer. But at the end of the day, the customer still has to pay for it. The customer still has to, you know, they all have to pay their part in. You can't build a technology on the basis that you're just going to do it cheaper, because that's not what it's about. And that's some of these technologies we see are all about trying to cut costs, i.e. cut costs by removing humans out of the chain. Well, that's fine, but it's far better that if you're going to bring in technology to make those humans more efficient, so they can actually do more rather than just shrinkage, because shrinkage is not the, you know, I don't think I've come across any company that's shrunk to greatness in my history of life or whatever. It's about getting growth, it's about getting controlled growth, and it's about getting profitable growth. And, you know, and I think technology, as it was always done, you know, when you had the postman delivering on his bicycle or on his horse, you know, if you go to America, you had the old Pony Express delivering. That was not as efficient as when that bloke was then driving a train with a load of post in the back, you know. So it's just changing people into being much more productive in what they do. So have I overstepped? I think I've done my 10 minutes, and we've got. Hopefully, I haven't been too boring.
No, that was great. I think it really tallies with what we're seeing around, you know, as you put it, AI versus OI, you know, organic intelligence, and the interaction between the human and the AI-driven technology. And that certainly is the kind of discussion that we're having with a lot of our clients at the moment. So really appreciate you sharing your thoughts on that, Mark. So briefly here at the end now, we're just going to hand across to Steve Murray, who, as I mentioned earlier, is our applications director here at IPI. And he's going to give you a bit of a flavour of some of the capabilities that IPI have in terms of driving this AI and digital innovation. So over to you, Steve.
Brilliant, thanks, Isaac. So yeah, morning everyone, and yeah, thanks again, Mark and Rick, for some really fascinating insight into, you know, what's going on in the sector at the moment. I suppose it's my job and my team's job to listen to that, listen to what our customers are saying, the analysts are saying, and what the market is saying. And we're then actually developing and road mapping solutions and technology solutions to help customers address those challenges and the demands that their, you know, end customers are putting on them in terms of the way they want to interact with an insurer, you know, how they want to be served, and the expectation they have around that as well. And what we're seeing is this massive growth in AI in the market. So, you know, this concept of contact center virtual customer assistance. So the ability to utilize voice bot and chat bots to drive interactions for efficiency and improved CX. And the growth in that just in the last 2 years has been incredible, up 20%. And when we get the new set of figures from the analysts next year, again, with the impact that the pandemic's had this year, I'm expecting that to really be driven even further. And again, that's being driven predominantly from a consumer adoption perspective. Technologies like Alexa and Siri are really driving that, and customer expectation now in the way that we're dealing with contact centers, our insurers, for example, you know, they have that same expectation that they're bringing in the way that they want to interact when they have a service requirement. And again, another interesting stat, by the end of 2020, already 30% of companies are going to have employed some kind of AI within their sales and service process. So, you know, this isn't some sort of future thing that's on the horizon. Organizations and customers of ours are embedding this within their processes today, you know, and really seeing the huge benefit that, you know, automation and AI can provide. And, you know, again, backing that up, you know, again, all of the analysts and Gartner in their hype cycle for 2021 and beyond are saying that injection of AI around virtual customer assistance, chatbot, and also this concept of this sort of customer engagement hub are really going to be where the leading organizations are looking to make investments to really drive improvements in that service stack and around how they're treating their customers. And that engagement hub piece is really focusing on the concept of using that data and providing that data, serving that data up to the customer to provide a really fantastic personalized service. So knowing perhaps what they want, when they want it, and then serving up the right information at the right time for them. So with that in mind, IPI have launched what we call IPI Cloud AI. And I suppose conceptually, the best way of thinking about this is we are providing a cloud-based platform that in essence can fly in almost like a UFO and sit in front of your existing contact center, be that, you know, a legacy solution that's on premise or in a private data center, or indeed in front of a cloud platform if you're already there. And we have got integrations into the global leading AI and NLP organizations. So Google using their Cloud Dialogflow, AWS with Amazon Lex, Nuance and the Mix product, and also Microsoft Cognitive Services. Within that, we also have our stack of proven self-service and AI modules, which we layer in over the top. And what this can do is, as I said, very easily allow you to start injecting those AIs, those automation and self-service journeys into your business processes and recognize, you know, the benefits that drives. And for us, it's really exciting because it's allowing customers who, you know, perhaps aren't ready to make that migration step to a next generation contact center platform and actually start to consume these capabilities when they thought, you know, there may be a dead end for them based on the current tech stack they're on. So what are the key benefits of actually doing that? Well, you know, as with any sort of cloud model, it's 100% SaaS delivery. So you've got this evergreen concept of continual software updates with no overhead on the end customer to do. There's no equipment required to be placed on site, and of course with that there's a flexible charging structure which allows bursting of capability, to ensure that you're covering your peaks. What's more than that, there's also then that low customer IT involvement. Over the years where we've seen these projects stall is really around, perhaps where a legacy IT system needs to be worked on. Customers' IT teams are already heavily involved in other projects, and that can really slow things up. So it makes it a real light touch project. It's easy to spin up. So, there's this concept of, if you're going to fail fast and move on to the next thing. We can very quickly and easily spin up POCs and move into production systems off the back of that. And it's all about injecting that next generation AI into not only legacy platforms, but potentially, newer cloud-based solutions that might already be in place that perhaps don't offer or have a more inflexible approach to that. And then ultimately, what are you looking to do? You're looking to allow the human in the loop to do more, to service the customers better, to have higher quality conversations, better touch points, and really increase the capacity. So keeping that existing staffing base there, but allowing them to do more, which ultimately is going to lower the cost and allow you to improve that customer experience out to the customers. Now, we were going to show you a customer journey here. In the interest of time, that might be a little bit tight. So what we're actually going to do as a follow-up pack for the webinar, we're going to provide an audio-visual clip and show a journey, a customer journey off the back of that using IPI Cloud AI. So they're going to be a current IPI car insurance customer. They're going to have contacted in a recently moved house and they want a quick quote for buildings and contents. So they call IPI Insurance. The call is answered by IPI Cloud AI. So we're going to share those clips with you afterwards. You can see the journey that's taken, and you can, off the back of that, start to understand, where that AI process can inject additional capability into the call flow. So what we do immediately is a data dip into the policy system or CRM. So we've pre-identified the caller and we can serve up that personalized greeting to them. We then, using natural language processing, we capture the intent of what Louis wanted to do on the call so that we can then serve up the correct journey, so we can present them with the right process that they need to go through. We train the AI engine. So we've got specific training phrases to ensure the accuracy of the request that they're making. So again, what you don't want to be doing is serving up nonsense, as we so often see with badly deployed chatbots or speech attendants. And what we're doing throughout the process is constantly checking back using what we call the voice user interface to confirm our understanding of what's going on, to ensure that the customer is confident that they're getting the service, getting the request that they require. And what's really interesting is now, again, we can start to call external data sources to really start to propagate more data and information into the process. So what do I mean by that? Well, if we were doing perhaps a car insurance policy, we might want to make a web service call to the DVLA to ratify registration, make, model, number of doors, etc. We can spare the customer all of that arduous process. Again, we can also do that perhaps with a postcode address lookup service. So we take the customer's postcode, we make that call out, and then we push that data into the journey. It lowers the customer effort, improves accuracy, and then ultimately results in a premium being delivered at the end of that journey. So we'll share those clips with you. You can hear the audio, you can hear how the engine interacts with the customer, and also see in real time the transcription of that data within IPI Cloud AI. Yeah, something to share and look at in your own time. Very lastly, very quickly, we wanted to just give you some real world benefit examples on that, where we're probably running slightly over. I'll hand over to Ben and he can talk to you about where some of the fiscal benefits and capacity benefits are when you implement some of these AI capabilities.
Great. Now, thanks, Steve. And yeah, so to continue from Steve, really, we wanted to really make this real and provide a bit of context and feedback as to projects that we've run in the past and the results of such. And I've picked out 2 examples that I think are very applicable to every contact center that operates within sort of insurance space, and how the projects that we've delivered and the results that have been seen off the back of that. Now, the first process that I'm sure you're all aware of is that manual ID&V of customers, ensuring that who is on the phone, you are speaking to the right person and that they can verify they are who they say they are. So we know it's a very regulated, heavily regulated industry, but actually that whole process as a whole is about 45 seconds to start from the initial hello, Mr. whoever, and actually going through. Now, whilst that may not sound like a huge chunk of time, just by a call basis, actually, when the numbers are extrapolated out, it's an enormous amount of time spent doing this process. So to the points that we've covered earlier, this is all about using technology to deliver support and assistance to agents so that they have more time to deal with the more complex interactions and support that easier and customer journey. So this was an insurance company. They had 700 agents split over multiple sites, but we implemented an automatic ID&V application, which was performing a data dip based on the CLI that was presented to us. And from that, we were able to pull in a number of fields that we can ask the customer to verify themselves, either using natural language, or if that's if we have a problem with that, then we can actually use the keypad of the phone itself. And what we saw from this project in particular was that 80% of calls that went through that were actually able to come out of that process as a verified caller. So that, when we run the numbers, it is an enormous amount of capacity that is provided back to the business. On the next slide, Steve, if we can just jump over just quickly to the next one, thank you. I've put this table on here just to try and make this as real as possible, because people that are on the call you'll have an understanding of roughly where your organisation, where your contact centres will fall onto this table. And as I sort of said previously, it's one of those processes that it's not necessarily considered, but everybody's doing it. And actually, by enabling some automation here, there's some potential for enormous capacity gains and delivering of that time back to the business and agents as well. Cool. The second process that I wanted to talk around today, we know it's something that every contact center struggles with, and that's basically the over demand. People are trying to contact at certain times of the day, and how the impact that can have on a contact center, both from a customer experience, but also an agent experience as well, and how that can be sort of the negative impacts that could bring. So Steve, if we're right to jump to the next one. Thanks very much. So the organisation that we did this with, the demographic, the customers really sort of preferred the voice channel. So this is where we couldn't start thinking, or implementing stuff that would be driving customers to a different channel. Actually, they prefer the voice channel. So then sort of getting a bit creative and about how we can deliver an improvement to that journey, especially over sort of certain times of the day and months of the year. So the challenge that this organisation was facing, that they were sort of running on fewer staff, and they had a particular 2-month window of the year that was particularly a crazy time, really, we should say. And what we did here was we implemented an intelligent and automated callback solution, so that when we were sort of analysing the calls coming in, and so we're able to predict that actually if a customer is going to be on hold for more than 2 minutes, then we're going to offer for that customer to take a call back, and then we will intelligently drop that call in that needs to be made when demand allows. What this actually resulted in was a reduction in both the call length, but also an increase in sales as well. customer's perspective, it's very difficult to buy those add-ons to policies, for example, when you've just spent half an hour on hold. You're not really in the sort of frame of mind to be spending anything extra than the absolute minimum that you need to. So we were able to see an increase in both sales and sort of the sales conversions, and also a reduction in the call length. And that, when we drilled down into that, was really to do with the customers calling in were not sort of spending the first sort of minute or two complaining about how long they'd been on hold, but actually those that did enroll into the service were both impressed with how quickly we made the call back, and those that chose to wait on hold were making comments more along the lines of, "You guys are really busy today," you know, and actually that drove a level of empathy with the customer that the agents they're only trying to help. And so that it had an impact on the agent experience as well, which is, I've actually got a few quotes on the next slide, because it's something that we sort of touched on, but it can sort of sometimes get a little bit forgotten. Is that actually there are agents, there are humans dealing with these customers coming through. So whilst we talk about technology to improve the customer experience, actually the secondary benefit here is the employee experience as well, and there are softer and longer term benefits for an organisation to realise when it comes to this. But certainly when it comes to things like reducing attrition rates, for example, it's definitely something that can be considered, but it all relates back to using that sort of intelligent application of technology to assist the journeys as we go through. So that's my bit, and I'm fully aware of time, so I'll hand back now. But thanks.
Yeah, thank you very much, Ben. I think that was really useful. You know, just to, I suppose, put some real world figures around some of this technology. It's very easy to get lost in the excitement of the technology, but not to appreciate how it can benefit business. So thanks for that. So as everyone sort of mentioned, we are running over, so apologies for that. But we are still going to do a question or two, and we've had some come through, which is excellent. So let's start with this one. What do you think the insurance contact centre will look like in 2 years' time? So a very open-ended question. Mark, why don't we start with you? Mark, what do you think about that?
I don't think it looked like a rabbit warren, but it looked, you know, if you go into some of these ones, they're like rabbit hutches, and you've got everyone stuck into little things. I think by efficiency and by things, and the need for the member of staff to actually have proper interactive technology around them will mean that they'll be on bigger desks with more bits. You know, whether or not we get to, you know, be wearing headsets that are sort of cover your eyes as well. So you've got virtual world. I don't know. That could be coming at some stage. I think, yeah, I think it's going to be not a lot different, because nothing's ever really lots different. But it'd be a much better. I mean, very much back to Ben's point. I think it'd be a much nicer place to work in. And I think that makes them more productive.
Thanks, Mark. Rick, what do you think about that?
Guys, when I move, I think that there's probably 3 things I would say that is going to be different. The first is there's no question that there's a lack of capacity for handling calls from customers. You know, we all wait far too long, and I think the first thing is that technology is going to enable the call contact center to handle many more calls, more automated than is currently done today. The second is that you're going to get much greater use of what you'd call cognitive AI. So this would be technology in the background, listening to the calls, and then going off and taking care of tasks that frees up the agent to deal just entirely with the call itself. And I think, for sure, you're going to see great use of biometrics in use to identify callers in advance.
Brilliant, thanks, Rick. And then finally, Steve, what do you see the future of the contact center looking like over the next couple of years?
Yeah, I mean, I think as I sort of stated in all of the work we've done, we very much see the augmentation of AI within the agent's environment. So, you know, how we're going to be using AI and NLP to really help drive them to deliver a better customer experience. I think what we're also going to see, touching actually a little bit on what Mark was mentioning, whether we'll have sort of VR headsets in the next 2 years, I'm not sure, but I think what we will certainly be seeing is video, integrated video within the contact center. We're seeing the rise of video as a contact medium for customers, again being driven from WebRTC and smart devices, being a far more or a far greater demand that's coming up. So I think in the next 2 years, certainly a lot more video-based interactions will be happening across the contact center as a whole.
Brilliant. Thank you very much, Steve. So yeah, we are unfortunately out of time, but thank you to all our panelists for sharing their thoughts. I suppose my only closing remark would be, I suppose today we kind of set out to try and cut through some of the noise that we're seeing around AI and digital. It's a very confusing and crowded sort of marketplace. So hopefully we've helped you make some further sense of that, and hopefully you've also got a sense of IPI's capabilities and our ability to deliver upon business objectives, particularly around contact center technology. So we will be following up with all of you individually. I know there's been a number of questions we unfortunately haven't got to, so we can answer those offline. So if you've enjoyed the session, please follow IPI and all the usual places, LinkedIn and Twitter. And as Steve mentioned earlier on, we will be following up with a copy of the video sort of showing you a real example of IPI's AI cloud in action, along with a replay for you to rewatch any of this, or feel free to forward it on to anyone else sort of internally who might benefit from a view. So thank you very much again to all our panelists. Thank you to you for watching, and we look forward to speaking to you again soon. Thanks a lot. Cheers. Bye.
Thanks.
Yeah.